Hey folks, it's Simon here. Welcome to your Tao Daily for Monday, the 2nd of December 2024. Hope you had a wonderful Thanksgiving weekend. Well, we've finished the month of November, so I thought we'd spend a couple of minutes together looking at some monthly charts here. So we'll start off with SPY, it's S&P 500, which for me is pretty much the center of the universe as far as trading goes. And that's just closed out a very, very bullish month in November. We're trading at new all-time highs at the end of the month, getting pretty close to some Fibonacci targets in the short term, so we could expect this rally to run out of steam soon. We had a monthly squeeze fire long, and we're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars into that. Usually a squeeze will last sort of 8 to 10 bars on average, so this could be getting long in the tooth. We could be just due for a bit of consolidation here. Now, if we look at RSP, which is the equally weighted S&P 500, that is looking bullish as well. That has also made a new all-time high, closed out the month at a new high, looking very bullish and potentially has a little bit further to run in terms of the momentum. If we look at the Qs, which is the ETF that tracks the NASDAQ, this is also looking bullish. It didn't finish the month quite at an all-time high, but it is closing. It did manage to close out above the previous all-time high, so it's potentially starting to use this as an area of support, which you can see perhaps a little bit easier on the daily chart. But NASDAQ looking bullish. Let's check in with IWM, small caps. Little potential there for a bit of a bull trap. You can see how it peaked above the previous all-time high, albeit very, very temporarily. Didn't manage to close above there, not even on a daily basis, all right? So not a confirmed bull trap, but something we just want to watch for. If we do close above this level, we don't want to close back inside that level, all right? But IWM certainly playing some important catch-up to the major indices there, and the Dow here actually leading, looking very, very bullish, was up almost 8% for the month and looking great. A couple of changes in trend potentially coming evident in the bonds. If we look at the long bond, you can see, okay, the monthly chart looks bearish, but we're potentially forming an uptrend here. We've got a high, and then a higher low, and then a higher high, and then potentially another higher low forming here with some Fibonacci levels acting as resistance. If we compare that to TYX, which is the 30-year bond yield, you can see here we're signs of a downtrend. We've got a low, and then a higher low, lower high, and then a lower low. All right, so something hardly anybody's really noticing at the moment, but we could be in the early stages of an uptrend in bonds. Let's check in with gold quickly. The daily chart there has been pretty noisy, but the monthly chart here looks fantastic, looks super bullish. Even on the weekly time frame, you can see a bit of noise here, a bit of a sharp pullback, but it's managed to regain its composure, and gold continues to look pretty bullish here. Bitcoin, of course, looks amazing here. It's at new all-time highs. That had an amazing month in November. It was up 37%, obviously on the back of the Trump's election victory. So no issues there. If we look at high-yield bonds, which are HYG, it's sort of a proxy for junk bonds, riskier credit. This is starting to improve as well. You can see we've got the semblance of an uptrend here. Momentum bars have turned green on the monthly. The squeeze has fired long on the monthly, which again would tend to lead towards a bullish tailwind there. All right, so even though markets in the short term are looking a little extended here, the monthly charts look extremely bullish, which should keep us in buy the dip mode unless we see a real degradation in trend structure. That's what I got for you. I hope it helps, and I'll catch you next time.